Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 1st, 2025, and we're diving into the latest earnings report from Intercontinental Exchange, a leading global provider of technology and data services. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Intercontinental Exchange, or ICE, has just released their first quarter 2025 earnings report, and it's packed with impressive figures and strategic insights. I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Intercontinental Exchange reported record net revenues of $2.5 billion for the first quarter of 2025, marking an 8% year-over-year increase. John, what are the key drivers behind this growth?
Absolutely. The growth in revenue is primarily driven by strong performance across their segments, particularly in exchanges and fixed income data services. The company also reported an adjusted EPS of $1.72, which is a 16% increase year-over-year, significantly beating the analyst forecast of $1.69. This indicates robust profitability and operational efficiency.
That's impressive. And how about their operating income and margins?
ICE achieved a record operating income of $1.2 billion, up 15% from the previous year, with an operating margin of 49%. On an adjusted basis, the operating margin was even higher at 61%, showcasing their ability to manage costs effectively while driving revenue growth.
Segment performance breakdown. John, can you give us a breakdown of how each segment performed this quarter?
Certainly. The exchanges segment led the way with $1.4 billion in revenue, boasting an impressive operating margin of 74%. Fixed income and data services brought in $596 million, with a margin of 39%. However, the mortgage technology segment faced challenges, reporting a revenue of $510 million and an operating loss, resulting in a negative margin of 5%.
What might be causing the struggles in the mortgage technology segment?
The mortgage technology segment is dealing with higher operating expenses, which are impacting its profitability. However, on an adjusted basis, the segment shows a healthier margin of 40%, indicating potential for improvement as they streamline operations.
Shareholder returns and financial position. Let's talk about shareholder returns and ICE's financial position. How did they perform in this area?
ICE returned $519 million to shareholders in the first quarter, which includes $241 million in share repurchases and $278 million in dividends. This demonstrates their commitment to returning value to shareholders. However, they do have a significant amount of outstanding debt at $20.3 billion, which they are actively managing through strategic investments and deleveraging efforts.
It's good to see a balance between rewarding shareholders and managing debt. How does this position them for future growth?
With a strong cash flow and disciplined financial management, ICE is well positioned to invest in growth initiatives while maintaining shareholder returns. Their diverse platform and strategic focus should support continued value creation.
CEO and CFO insights. What insights did we get from the leadership team regarding this quarter's performance and future outlook?
Jeffrey C. Sprecher, ICE's CEO, highlighted that this was the best quarter in the company's history, emphasizing record revenues and operating income. He expressed confidence in ICE's all-weather business model amidst geopolitical and macroeconomic uncertainties. CFO Warren Gardner echoed this sentiment, focusing on the quality and durability of their business model and their strategic growth initiatives.
It sounds like the leadership is optimistic about the future. What are their plans moving forward?
They plan to continue disciplined investments to support strategic growth initiatives, aiming to create long-term value for shareholders. With their diverse platform, ICE is well positioned to navigate challenges and capitalize on opportunities in the market.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast and how ICE performed against analyst expectations.
Analysts had forecasted an EPS of $1.69 based on a survey of 10 analysts. ICE exceeded these expectations with an adjusted EPS of $1.72, beating the forecast by $0.03. This positive surprise reflects the company's strong operational performance and effective cost management.
How has the market reacted to this earnings beat?
The market has responded positively, with investor sentiment buoyed by the earnings beat and the company's robust financial performance. This reinforces confidence in ICE's ability to deliver consistent growth and shareholder value.
Key takeaways. In summary, Intercontinental Exchange has delivered a strong first quarter with record revenues and earnings exceeding analyst expectations. Their strategic focus and operational efficiency position them well for future growth. Thank you, John, for your insights today.
Thank you for having me. It's been a pleasure discussing ICE's impressive performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Intercontinental Exchange's performance in the comments below. Until next time,